Thank you for watching this preview video at xm.com. We'll be discussing the Reserve Bank of Australia's upcoming meeting and the potential reaction in the Australian dollar. I'm Maria Pachordes, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, the RBA has been on hold for the past 4 months, but at the October meeting, policymakers did signal their readiness to raise interest rates again. Can you tell us about Australia's recent inflation data for the third quarter and how that might impact the RBA's decision on Tuesday?
Well, Maria, that is right. The RBA has been on pause for some time now. So the last rate hike came back in June. And the reason why they went on this extended pause, if you like, is because the inflation data was moving in their favor. And also there were concerns about the economy slowing too fast. More recently, though, it does appear that the economy did perform much better than expected in the first half, although the latest PMI readings are maybe slightly worrying, but it's too soon to tell whether or not that's going to be sort of a one-off or we are indeed headed for even deeper slowdown, because things on the China front have started to improve. The labor market remains tight. And then, as you mentioned about the inflation data, we are now seeing some inflationary pressures resurface, because although the last quarterly CPI reading did decline on the previous quarter, it was nevertheless slightly above expectations. And then if we have a look at the monthly readings, they've been heading higher for the last couple of months. So now there is this concern among policymakers that they haven't done enough. And so heading into this November meeting, there is growing consensus, both in terms of investors and among economists as well, that we may well see the RBA resume its rate hiking cycle. And so we may see a 25 basis point rate hike on Tuesday.
Moving to the Aussie now, it's been under pressure against the US dollar since the start of 2023. What reaction might we see now if the RBA ends up hiking?
Well, the Aussie has been under a lot of pressure. That's partly been down to widening yield differentials between the US and Australia, and also because we have seen this lately. There's been quite a lot of risk aversion in the markets. So the RBA does tend to lose out in when we're not seeing positive trading environment. But the other thing, of course, to note here is that markets haven't fully priced in a rate hike for Tuesday. It's around 60% priced in. So should we indeed see a rate increase, that could well boost the Aussie, at least in the short term. In the longer term, I think it's going to come down to, first of all, whether or not the US dollar remains on the back foot, like it has done over the past week, but also the language we're going to getting from the RBA, whether they're going to signal one more possible rate hike, because at the moment markets are pricing into a possibility of another rate increase at some point early next year. And also to help us get a better idea of this, there's going to be the updated inflation forecast coming out a few days later next Friday.
Rafi, thanks so much. This was a preview video here at xm.com.